Steve, what do we know about this cap?
So far we know that it's looking to be about 188 euros per megawatt hour. To put that into context, the European gas prices closed on Friday around 115. So we're not above that cap right now, but it is much lower than the cap that they were proposing before. The previous cap, which was nearly 3 times higher and required a 10-day stay above those prices, was seen as just window dressing, something that wouldn't actually happen. There would be no way that that cap would be implemented. But at 188 euros, for just 3 days, then you will have the cap executed and you wouldn't be able to trade contracts above that price. That has happened in the past, and it is possible. If there is a cold spike, then potentially, if this cap is agreed to, it could, to some degree, be implemented. So this cap does look to have a lot more teeth than the previous one. There are a lot of discussions to be going on. Germany has not necessarily been a big fan of these stricter caps, so there is going to have to be a discussion as the entire European Union has to agree on this cap, but it could provide relief for markets, and it could provide also some downward pressure for prices, which are trading near the highest level for this time of year ever.
If there is an agreement, does that also then start talks on broader energy measures as well?
Yeah, absolutely. I mean, if this is just one piece of a larger puzzle that the European Union is putting together to kind of help get over this energy crisis, they're also looking at potentially jointly procuring LNG, liquefied natural gas, or natural gas supplies, so that they're not outbidding each other. The European Union, there are a lot of nations, and they all have their own interests. So there have been times in the past where they would, pay a little bit more to get a contractor to get supplies over from another person or another company. Now going forward, maybe they'll join together to do some sort of caps. They're also looking forward to potentially other measures to help reduce demand. The gas that isn't used is the best way to avoid any future crunches. So they're looking at all the ways possible to really reduce their demand, reduce their consumption, so that they can get through this crisis, which has cost the region nearly $1 trillion.